So we are entering the second quarter of 2023, and of course we're wondering, what happened in the first quarter? Why did it happen? What's the future look like? And is there a window of opportunity? What's interesting as we go into what has historically been a busier time where things do spike up, a number of things are starting to occur. One thing is tax returns are getting done. So people know if they owe some money, they're going to receive some money. And of course, did the investments they make, did they pay off with a great return? Or is there a need to add some investments to offset some tax was paid in the prior year? So all these things culminate together to increase the activity for the casual and the institutional investor. Now, it also is a time where we're nearing the end of the school year, and this is a great opportunity for people that are becoming empty nesters or having kids going to school to move to the next location that would really suit their needs. And as you add all of these things together, you find increased activity in the real estate market. Now, we're also noticing that there is continued volatility in the banking industry, which also affects the stock market and equities. So now, when there is uncertainty in the equity market, people are cashing in those funds, reallocating to something that might be just a little bit safer for most people in real estate and having that hard asset. And if it's an investment property that's bringing you money on a monthly basis and the potential for maybe an increased property value down the road, it seems a lot better than the volatility of the stock markets going up and down, and the prospect of dividends and other returns probably are not as good as the monthly cash flow in investment real estate. So we're seeing these things. And with that in mind, the first quarter, being off as far as property sold, there's some anomalies in there too. But my belief as we get into the second quarter, you're going to see more activity in the real estate market and eventually more units being sold. So let's recap the first quarter. We can look at our market localized and say that sales are off probably 35% as far as the number of properties sold. And it's compared to last year. So just a year ago, a lot less properties are being sold. Now, we know it's well documented that the interest rates are higher and there's less people making purchases and are taking longer to do it. What hasn't happened, and this is a consistent story that I continue to talk about, is that prices have not gone down. Matter of fact, they're up 1%, maybe even 2% year over year. And a lot of people still just either can't or won't or refuse to get their head around the fact that, there's less being sold, there's increased inventory by a pretty good sum right now. And higher interest rates, purchasing power is not going as far. Prices should be coming down, and they're not. And they're not. As long as people continue, at least for our market, to move to this area to escape either high taxation or some policy within the government of the state that they are currently living in to one they prefer in the state of Florida, this is going to be a continuing trend. Hey, if it was none of those things that existed, the weather in Florida is still nicer than most areas of the country, especially in the winter quarter, if you will. So these are reasons people continue to move to Florida. There's some economics and the underpinnings behind it, which caused this to be trending upward in price when everything that we know and understand would suggest that prices might be going down. So what looks into the future, my crystal ball that I'm noticing is that we do have more people getting ready to re-enter the real estate market for purchasing and for selling as well. And there are strategies that are helping people buy now and sell later or have the simultaneous closing. Some people, they're just making the move and selling the property and then going to purchase a little bit down the road, maybe rent for a month or two while they get their feet underneath them when they get to a place such as Florida. So with an increased amount of people entering or re-entering the market, prices relatively stable, but going up a little bit, what would cause a window of opportunity to appear? Well, let's talk about the bankings. situations that we're seeing right now and the bank failures and the continued, I'll just say jitteriness. Is that a word? Jitteriness. People are looking at banks right now, wondering, is there another one that's going to fail? And will the government continue to prop them up, or what's going on with that? My thought is this. The Fed did increase the interest rates by a quarter point at the last meeting. There was some sentiment that it was a 50-50 proposition that they might not raise this time, but raise the next 2 or 3 Fed meetings. Well, they did make the raise, they went up a little bit. But the prospect of increasing rates over time has not changed for the Fed. So I might argue that if you're going to be making a purchase over the next 3, 4, 5, even 6 months, the interest rates are likely to be higher after each Fed meeting for the next 2 or 3 meetings. So if you're going to purchase, the interest rate today is lower than it's likely to be through the end of the summer. I think that's something we could probably take as close to a fact as possible for seeing in the future. Interest rates are going to be higher by the end of the summer. Prices continue to go up 1 to 2% over time. So the cost of home that you want to buy, well, it's going to be cheaper today than in the fall. And by that time, a number of people will be lining up to get positioned for the next school year. And there's always that frenzy towards the late July and August where a lot of properties go under contract to get positioned for the right schooling. It's packed. It happens every year. So if you know that there's going to be more competition 3 months down the road, and the interest rate's going to be higher, and the price of the home is going to be higher, one could argue that the window of opportunity is the next 45 to 60 days to get a better deal now than you can get a few months down the road. And for most people right now, having been through tax season, they at least know if they qualify, what they might qualify, and they've really gone through the emotional process. If I'm going to move, this might be the time to do it. You see, the numbers are telling us that more people are likely to come to this conclusion that it's cheaper to buy today than it will be this fall. And what has me feeling confident about this, I don't even call it prediction, this vision, is that most people do not move because of the interest rate or because of the price or because of the competition. They have a different reason to move. They're getting married. They're getting divorced. They're adding a family member or blending a family. Someone passed away. They got relocated for a job. They decided to move to a warmer climate. They retired. Wait, maybe they retired and re-entered the workforce. See, these are reasons that people move, and there's others. The 2 less likely reasons that affect far less people are flipping houses and wholesaling houses, things like that. The buying of investment properties with rents the way they are, it's still scalable, but the price points and entry points for homes have made it a little more challenging to buy the right investment property. So I would just say on the investment property side, that could change with the economy and interest rates and things like that. But most people move for a reason that does not include interest rates, rising rates, and competition. When interest rates were 20%, 40 years ago, people still moved. They found a way to do it. Sellers were paying for discount points to help people qualify for the loan. So there's always a reason outside of the economic reason for people to move. And quite honestly, those are the most compelling reasons. When it's time to move, it's time to move, regardless of what's going on in the economy or any of these other factors. You got to move. And that's what's keeping my vision on this market is ever increasing with regard to price. There's still hardly enough homes in Florida for all the buyers that are out there. And even though that inventory levels have increased since last year, they're still way behind where it was a few years ago. And we're nowhere near a balanced or normalized market. If there was a 6-month supply, that would be considered a neutral market. But we're not there yet. We're not even close to it. We maybe are getting close to a 3-month supply, but that could change rather quickly. And keep in mind that the statistics that you see could be varied. Was it the number of homes currently in the market today, or was it the number of homes available at some point in time during the month? And then you got some extra math to do in there. So there's some, I don't know, call it trickiness, but you really need to drill down on what the number is representing and what it means over the course of the month and the first quarter. There is likely to be a additional energy coming into the market with the summer for all of these reasons. And what happens? Well, what happens when the Fed eventually does not raise the interest rate? Does that bring the rates down where there's another spike of affordability? It might, but if rates go down 0.25%, but the price is up several percent down the road, the purchasing power that most people are looking for and hoping for when rates do slide down, it's not likely to change the monthly payment to a lower number than it could have done this today. So most things that I'm noticing in this market are pointing to this window of opportunity right now where buyers can actually do better today than they would be able to do in just a few months down the road. And when we get towards the end of the year, well, all bets are off because we'll be entering an election season. My suspicion is they'll start doctoring rates and doing things that make the economy look a little better. But right now, I'm not sure that that's going to really affect home values in the negative. If anything, that might push values higher. And again, the offset of increasing prices versus a slight decrease in rates probably is not working in most people's favor. So without getting salesy, because I've got nothing to sell today other than wind form, it's very likely that the price that you're going to get today over the next 45 to 60 days is better than you're going to see for the next 3, 4, 5, maybe even 6 months. And that's the message today. So if you're even thinking about doing something, look at your numbers, get with your mortgage professional, if you're even financing, or get with your investment portfolio manager and find out, is there a cost benefit to moving money from equities into real estate? And I think what you'll notice is most people are actually moving towards that piece right now. So, all right, this is what I have for you today. Give you some really good information. Hey, I'd love to hear the other side of it. If you think different, let us know. This is Ron Wojciechowski for the Black Hole of Real Estate.